Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. Professionally speaking, we are a multi-asset and multinational hedge fund. By multi-asset, we are covering our positions in multiple asset classes, and by multinational means we cover at multiple locations. But like I repeated many times, that we are a proprietary hedge fund. By proprietary, I mean to say no third party can invest capital in our funds. I did promise people that Treasury Consulting would be entering the MENA markets. MENA stands for MENA, which means the Middle East market. Somehow it took me around 2 months to materialize this. This is my second video covering the MENA market. First, I shot today, and second, also, I'm shooting today. And I'm promising you now the way we covered foreign exchange, the way we covered financial market, the big banks, we would be covering MENA as well. Guys, in my both videos, first and second, I shortlisted a financial institution of Dubai. And I don't think I need to introduce this financial institution to you because it is Emirates NBD, shortly known as NBD. I went to their website and I downloaded the few selective pages of the annual report of NBD. Right? You know that I am a statistical person. I am a person who was ex-corporate treasurer. God is kind. You name the bank I not interacted with. God is very kind. You name the bank I am not interacting with. Henceforth, I am a person of statistics. Before commenting on anything, I first visit the website, download the annual report, study the annual report, and then I comment. The very interesting fact which I have noticed in Emirates NBD annual report before I speak further is their statutory auditors is Deloitte. Congratulations. There is hardly any fraud which Deloitte and EY left with, because it is very difficult to substantiate who is more corrupt and false in practices, Deloitte or EY. To me, it is EY. To you, it may be Deloitte. But there is enough competition between Deloitte and EY. Every month, Deloitte and EY name came in one scandal or another. Just like a couple of months ago, EY name came and Securities and Exchange Commission charged EY 100 million US dollars. I repeat, 100 million US dollars, which is approximately 820 crores Indian rupee in current terms. And what is the achievement? Achievement is, the manipulation in CPA paper. Guys, banks take variety of deposits, whether it is Goldman Sachs, whether this is JP Morgan, whether this is Citi, Wells Fargo, or you name, hardly matters. But this is not true to Indian banks because Indian banks have limited global operations. While if I speak about Goldman Sachs, Citi, JP Morgan, Wells Fargo, Morgan Stanley, and other few selective ANZ, Westpac, NAB, UOB, OCBC, TBS, they have operations worldwide. Henceforth, their consolidated balance sheet, remember, consolidated balance sheet is subject to have variety of currencies. They cannot run away from that because their operations are designed in such a way. This is something which we really need to agree on that. In this eventuality, banks take all three type of positions, which includes cash flow hedges, which includes fair value hedges, which includes net investment hedges. Generally, the net investment hedges are taken to cover their foreign operations. And there is nothing wrong in that. Nowadays, we have seen a trend that banks have started taken derivatives as a trading position, which means to boost their profit. Because interest rate is very volatile, henceforth dependence on NIM or NII, whatever you say, net interest margin or net interest income, is very, very tough. No bank is an exception to that regards. But when I look at the financial statements of Emirates NBD, which is paragraph number 35, and please note that this is a consolidated financial statement. I am a person who always consider consolidated statement rather than standalone statement because I strongly believe that consolidated statements give you a lot of information as compared to standalone because of a concept called net off. Sometimes if you take standalone, you might not be able to net off the numbers, but when you take consolidated, it means the netting off is already done. Now, this is a consolidated group numbers as of 31st December 2021. I repeat, 31st December 2021. Guys, you would be surprised to know that the total derivative position of Emirates NBD is 817 billion. 817 billion AED, their local currency. Basically, the reporting currency is the local currency, AED. 817 billion. And you would be very surprised to know that out of 817 billion, approximately 92% of that derivatives is held for trading. It is not held for hedging, held for trading. And this is something that caught my attention. 92%. 92%. And what other thing that caught my attention is the definition of the fair value hedging. Please see that I'm only reading the definition provided by the NBD. And then I let you know about my and the technical definition of fair value hedge. The people who watching this video should take a note that this isn't the first time I cover fair value hedge. My YouTube channel even cover liquidity swaps about fair value hedge, which no one even knew that what the hell is liquidity swaps. So according to page number 70, paragraph number 35, page number 69, precisely, the NBD gave the following definition of fair value hedging. According to NBD, it is the group uses interest rate swaps, shortly known as IRS, to hedge against changes in the value of investment securities due to interest rate movement. These are designated by the group as fair value hedges, and therefore the fair value hedge accounting is applied to hedge movements in the value of fixed interest rate asset and liabilities subject to interest rate risk, as well as asset and liabilities subject to foreign exchange risk. Take a note of that. Subsequent to initial designation, changes in the fair value of derivative designed as fair value hedges are accounted in the other operating income. Other operating income. Take a note of that. Along with any changes in the fair value of hedged asset or liabilities. I've been through their annual report, and one thing is clear, they do accounting as far as IFRS is concerned. This is the definition which is provided by Emirates, NBD. But is this definition is correct? That is the most important point. You must be thinking that Deloitte is their auditor, so definition has to be correct for many people. But for few people, they are correctly aware that the credentials of the Deloitte is available on Google, not only in India but worldwide. Henceforth, the definition of fair value hedging is under subject to many interpretation issue. You must be thinking why I'm using a word interpretation issue. Interpretation issue is rarely, I would say rarely, used in financial markets, especially in foreign exchange. Rarely. It is a term which is often used in law, judgments, cases, arbitration, and all these kind of things. But in financial market, in foreign exchange, there is hardly any scope of interpretation. Hardly. Yeah. Until otherwise, you take a high class derivative instrument and the valuation of that instrument is dependent on L3 indicators, which is called mark to model. And due to this mark to model, the valuation issue arises. This is the only reason. The right definition of fair value hedges is all asset and liabilities which are lying at the time of consolidation in the books and are subject to revaluation risk. Example, Emirates NBD is predominantly a Dubai bank, Middle East bank, you can say. Their home currency is AED. So would be their reporting currency. No conflict. But what would if an American national deposited 2 million US dollars in Emirates NBD. And the bank is offering 4% interest rate to that American customer. Now, when on a monthly basis or a quarterly basis or on a semi-yearly basis or any basis, once NBD doing the consolidation, they would be revaluating the dollar in AED terms. And we are shooting this video in November 2022. How volatile the currency market. Today, only on one news, the market moves and Japanese yen today, down from 146 to 142. 146 to 142. Only on one news. And Emirates wanted to say that in their disclosure, which they are mentioning, the fair value hedges is all about IR risk. IR stands for interest rate risk. Fair value hedging has nothing to do with the revaluation, except the Almighty, which is sitting in heaven. No one in the world can say that the impact of revaluation risk can be ignored. No one except the Almighty. Forget Deloitte as an auditor. I challenge the definition of fair value hedging mentioned by the Emirates NBD Bank. I challenge that definition. Like I said, we now entered into MENA market. We would be covering all banks of the MENA. Please be rest assured. This is not a right definition of fair value hedging provided by NBD Bank. Because fair value hedging, whether this is IFRS 9, IFRS 11 or IFRS 13, it covers the biggest element, which is called revaluation risk, which is missing here thoroughly. I tried to compute this statistically to prove my point. You know that I am a person of statistics. And I told many times that wherever I see EY, Deloitte, KPMG, and PwC as statutory auditor, step number one I do is completely disregard that financial statement. Because if you look at Google, you will see their credentials. And this is yet another live example that fair value hedging definition is subject to huge interpretation issue. Not minute interpretation issue, huge interpretation issue. This is the scene. I took my favorite friend, my scientific calculator, to prove my point. And I visited page number 68. Page number 68 of the annual report. The total positions of derivatives is 817 billion. Guys, all numbers are in AED. I repeat, I will not repeat that. All numbers are in AED. So total is 817 billion. Very good. Congratulations. Out of 817 billion, 92% are held for trading, which means they cannot be accounted as fair value. Technically speaking, once a derivative is freestanding, you cannot consider this as cash flow. You cannot consider this as fair value. You cannot consider this as net investment. The reason being, now it is freestanding. As simple as that, as the word define, freestanding. Out of 817 billion, only 30 billion, 30 divided by 817, 3.68%. Only 3.68% of exposures of Emirates NBD is subject to fair value hedging. Only 3.68%. And I'm not saying this. This statistics is saying this. That the total derivative exposure is 817 billion, and out of 817 billion, 30 billion is the fair value hedging, which effectively means that the total is 3.68%. Can you digest that? Can you digest that? First, can you digest the definition of fair value hedge? And then, can you digest this statistics? I went on to prove my point. The fair value, which is called MTM, although we'll have separate video on fair value, but the fair value, net fair value, which is positive and negative, it's minus 800 million. Minus 800 million. Negative 800 million. 30 billion is the total notional which is there. 30 billion. And how much is the MTM? Minus 800 billion. 800 million. Which means less than 1 billion. 2.6%. 2.6%. And you know the beauty? The beauty is the definition of hedge effectiveness testing, which is provided by Deloitte in the next page. And after listening to this definition, you will feel Einstein, Edison, and Newton together cannot justify this. I visited page number 70 of the annual consolidated report by Emirates NBD, and hedge effectiveness is defined here. What is that? Hedge effectiveness is measured by the group on a prospective basis at inception, as well as retrospective where applicable. Retrospective and prospective. I will deliberate this in my other videos, but I have given appropriate hint. Start again. Hedge effectiveness is measured by the group on a prospective basis at inception as well as retrospective basis where applicable, and prospectively over the term of the hedge relationship. Sources of ineffectiveness in hedge accounting include the impact of derivative related credit risk on the valuation of hedge derivative and hedged item. Credit risk. Emirates is talking about credit risk, forgetting that the world is having XVAs, CVA, DVA, MVA, KVA, FVA, and many more. Henceforth, choosing a word credit risk and linking this with hedge effectiveness testing is invitation to a highly debate. Because credit risk should be linked with the valuation adjustments, not with the hedge effectiveness testing. To mitigate the credit risk, group executives execute group execute hedging derivatives with high quality counterparts, and majority of the good group hedging derivatives are characterized. Is the definition of the hedge effectiveness testing? Where did Emirates mention they are doing either qualitative or quantitative? Because they are mentioning they are doing as per IFRS. And IFRS is more focused on quantitative valuation, while US GAAP is more focused on qualitative valuation. Where this document by Emirates is mentioning qualitative or quantitative, where? That is the most important point. Where? And who audited? Deloitte. That's what I always said in my videos many times, that hedge accounting is one of the most non-discussed area we have in the world of financial market. It is the area where there is hardly any focus by the regulator as well as the credit rating agencies. But Treasury Consulting is having a competence as far as the hedge accounting is concerned. I'll further reiterate that 817 billion worth of hedge book, and out of 817, 92% is a trading book. 92%. And this is the definition of the hedge effectiveness testing. Come on, guys. Don't make a fun of accounting, please. Do not make a fun of accounting. This is my only request to you. Anyways, if NBD and Deloitte is already offended from me. If NBD is also offended, then my contact details are +91 9899 242 978. +91 9899 242 978. You can visit our fixed income platform where you get all information. This is the beginning of MENA market. take a note of that. Thank you.